All right, what other things changed? We've got a few miscellaneous things that we need to talk about. The first one is business meals. Historically, for the last quite a period, it's a fair amount of period of time, is we've only been able to deduct 50% of meals. Now, this has changed in 2021 and 2022 in that we're going to be able to deduct 100% of food and beverages that were purchased in restaurants, as long as they have a business purpose, or any food deliveries that we've had, for at 100%. This is different, than prior years. Prior years, it was only 50%. The de minimis fringe benefits like coffee, et cetera, that fall into, they don't fall into this specific category. So they'll still only be 50% deductible. So now we're going to have these two categories. We're going to have a category of food and beverages, meals that's going to be 100% deductible, and we'll still have some 50% deductible meals. The next thing is the charitable deductions. Last year, we could deduct $300 if we didn't itemize. And we were allowed to that we could deduct for wealthy taxpayers. They could deduct 100% of their adjusted gross income if they chose to do so. The previous limit was 60%, but for this year, we will be able to continue to deduct for high income or taxpayers that choose to. They can deduct 100% of their AGI as charitable contributions. And the corporate rate is going to be 25% again this year instead of 10%, which it was prior to 2020. This is just going to be for 2021, both of these. And then in 2022, it'll drop back to the old limits. Okay. The other thing was the $300. Last year, we could deduct $300 if we took the standard deduction as an adjustment to income. This year, they still can deduct $300 for all filing statuses except married filing joint. And now married filing joint can deduct $600. Previously, married couples were limited to the $300 as same as everybody else, but now they can deduct $600. And also, it has now been moved to a below the line deduction. This is going to affect certain things. Below the line deductions will affect how the calculation of modified adjusted gross income works, which can affect things like how much Social Security is taxed, how much, other items, things like the alternative minimum tax. There's a few other things that can be affected by this, retirement savings credits. So the next thing that's changed is the sick leave and family leave for the self-employed. Last year, Form 7202 came into existence, and people were able to, who had coronavirus or had to go home and take care of family members due to the coronavirus, they were able to claim a family leave or a sick leave benefit on Form 7202. Well, they can do that again in 2020, in 2021, but there are some differences. The eligibility parts, having coronavirus, et cetera, all of that remains the same. But what's different is now we have two separate periods that we have to account for. The way it's going to work is we're going to have what's known as the carryover period. And so this period is going to be January 1st through March 31st of 2021. And they will still be able to get the benefit of, they can do 10 sick days, 50 family leave days. However, they have to reduce that amount by any amount that they claimed in 2020. So this is the first period. The second period is from April 1st through September 30th. And this is called the restart period. And in this period, again, the benefit calculation, everything is going to stay the same, but now we get additional days. So they can take an additional 10 days for sick leave and or family leave or some combination of the two. So it is going to be possible that you could have somebody who gets 10 days of sick leave in the first part of the year, and then an additional 10 days in sick or family day in the latter part of the year. But so this is going to be a thing, a calculation. The 7202 it's been expanded. The form's much larger than it was previously because we've got to now account for two different periods. The next thing is the lifetime learning credit. The lifetime learning credit historically has been a credit of $2,000. It's 20% of up to the eligible expenses, and it goes away based on these income thresholds. This has been changed. Going forward, the credit's going to remain exactly the same, but the income thresholds have now been changed to match the same amounts that are used for the American Opportunity Credit. So if they're not eligible for the American Opportunity Credit, but they don't have an income issue, so the lifetime learning credit will be the same dollar amounts for AGI, the thresholds and everything.